In the conversation on the markets forward with Devang Mehta from Spark Private Wealth Management. Devang, good morning. Thank you for joining in. Let's start off with Trent, though, is the earnings accident of the day on the nifty stocks at least. You know, when a stock has been at the street getting used to almost 35 to 40% growth, that even 16 to 17% growth looks below par, seeing the stock reaction. But have valuations now corrected enough for it to be an attractive bet? From almost 8,400, the stock is now below 4,300.
On the show. Good morning to all the viewers as well. I think, see, probably what we have seen in Trent, and this has been the sector retail or sort of a discretionary consumption has been one of our sectors to go to. What we have seen in Trent particularly, and of course, when the revenues decelerated in the last couple of quarters, it appears like that. But most importantly, what it is doing, the operational efficiencies, the automation initiatives, all are still making a lot of promise for the operating performance. If you look at the EBITDA margins, it is still roughly around 12.2, 12.3%, which is I think very good. Most importantly, the company commented about the like-to-like sales, which sort of decelerated a bit, and the same store growth, which we talk about normally in the retail, that was a bit slower due to maybe unseasonal rains or not so great a demand, because more so the demand in September started off on the back of GST reforms for very high ticket consumption. But whatever the company has guided about, I guess probably maybe a quarter of miss or so. But these are sort of, I will not say attractive valuations, but the correction in such companies normally provide you with good opportunities. The company was on track to start around 13 stores of Westside and around 40 stores of Zudio. So my sense, it's getting into a zone where I think it's trying to also eat out some of the competition. So as I said, at some level, probably maybe 5% correction from here on, it would start looking very attractive.
Okay, it's already at a fresh 52-week low with a 40% fall this year. So another 5% lower would put it closer to 4,100. And that, according to Devang, is an attractive entry point for Trent. What else, Devang, are you recommending for your clients to buy at this juncture?
Rima, what we are looking at, I think probably most importantly, if you dissect the markets, the last couple of months when we have seen a bit of a bullishness return back to the proceedings, I think with good macros, with a decent set of earnings. I will say this set of earnings were not as bad as the street predicted. But the stark reality is that only few companies have done very well. So on the bourses, I'm not talking about the result. The results of a lot of companies were good. But on the price action, most of the companies which have done well are probably sector rotation we have seen. It started off with maybe banks, then it came to IT, then a bit of oil and gas. Every week we are seeing the trend change in terms of which sector comes to the fore. What I mean to say here is the broader markets as such, a lot of mid caps and small caps, while your indexes are just very from a very near distance from the lifetime highs, all these companies are trading very low. So my sense that if somebody has the faith for the next couple of years, a good mix of large, mid and small caps, being sector agnostic and market cap agnostic, would do the trick. On the sector front, which you asked about, we are looking at a combination of discretionary consumption, as I talked about, where the GST effect will be more structural. Yes, you will not see this type of sales for the next 3-6 months. You would probably see a little bit of sobered down sales, but I think it augurs very well for the industry to be a part of discretionary consumption. Second is capex, which we always talked about. I think the capex is just, again, the government capex will not slow down much, and private capex should also come to the fore, with of the companies operating at 80-85% of capacity utilization. So I think sectors like power automation, engineering, manufacturing, all this will do well. And last but not the least is financials, which I always talk about, the intermediaries, the depositories, the AMCs, which mostly have seen good set of numbers coming so far. And I think with financialization wave on the rise, with penetration and density going to rise, these are sectors which one should sort of build in the portfolio.
But Devang, you mentioned discretionary consumption. Does consumer durables fall into that bracket as well? Because consumer durables companies, the commentary from them has flattered to deceive, to say the least, be it Blue Star, be it EPAC Durables, and a lot of others, and they have been smashed all through last week. Would FY26 be a washout year for these such companies, and would you recommend taking advantage of such a correction, because there will be a revival in FY27 on a lower base?
I think for sure, there is a very good chance of a revival in the sentiment if you look at per capita consumption of anything, right from cars to consumer durables, and you can take segment wise the likes of the air conditioning to your televisions, and probably also the premiumization trend, right, from people graduating from a normal TV to a LCD to a OLED. I think most of these companies which are now listed, and there is an ample choice now, right? From I'm not recommending anything, but right from Havells to the LGs of the world to Blue Star and Voltas into different categories. My sense that yes, any weakening of the stock prices because of not so good numbers, and it can be a trend a couple of quarters. But I think October, November, December sales should have been good for most of these companies because whatever we saw and whenever you interact with companies like Vijay Sales and stuff, I think there was a relative bit of good sales which these companies would have done. Yes, maybe operationally they can have 1 or 2 quarters difficult. Most of these companies have also done their capex. But my sense, somebody has a 1.5, 2 years view. These are attractive bets on a fall.
Devang, thank you for sparing time and joining us today. Looking forward to having you more often on the show. Take a short break. The management of InterArc Building Products joins in on the other side to discuss the road ahead and their second quarter results.